Right. Now on this side of the show, we are joined by Rajesh Agarwal, who's the head of research at AUM Capital, joining us now. And we've got our next caller as well. Ashwin is calling us from Bengaluru. Ashwin, hi, a very good morning to you. How can we help you today?
Hi, Mahima. Good morning and happy Navratri to you.
Happy Navratri to you as well and to your family.
Thank you. Thank you so much. I have actually a question on to where do I invest my amount? I have about 2 lakhs to invest, and I've done a little bit of research, and I have shortlisted a couple of banking names, that is Canara Bank and Bank of Baroda. I was just hearing Mr. Samir speak about Canara Bank.
Correct.
So I would like to know whether Canara Bank, Bank of Baroda and Trent, out of these three, which one would be the better pick where I could invest my money?
Okay, Ashwin, I got your question. May I know what percentage of your total portfolio will this be?
This will be about 10%.
Okay, all right, got your question. I'll take this up with Rajesh. Then Rajesh, your view with regards to this particular query. 2 lakhs is what he wants to invest in, and what counter should he go ahead and invest from the three he mentioned?
Good morning, everybody. First of all, my apologies for being late.
No
City
worries.
is underwater. So,
it's important that you're safe. Rajesh, it's important that you're safe. Thanks so much for joining us.
Alex, the entire city is underwater. It's the worst rainfall after 1978. So,
maybe you can take a video for us and you can send us the details, because we'd love to tell our viewers about it. And of course, everybody who's tuning in from Kolkata, I hope that you're staying safe and ensure that you don't venture out if you don't have to. Of course, you can always tune in from where you are and watch the show in case you can't head out. Rajesh, what were you making? What were you saying?
Thank you, Alex. As far as long-term investment is concerned, the gentleman has rightly selected some of the banking names like Bank of Baroda or Canara Bank. Both are very good. I have no doubt on that. What he can do is put 50% in Canara Bank and 50% in Bank of Baroda. That's out of 2 lakhs, 1 lakh in banking. That's 50% in Canara Bank, 50% in Bank of Baroda. And the rest 1 lakh, I would suggest go for put 50% in Trent and the rest 50% in Reliance. And give a time horizon of at least 18 to 24 months to have some decent returns in that. And I'm sure some very good returns would come out of these 4 stocks.
Okay, all right. So that's with regards to where Rajesh's picks are concerned. We've got our next caller. Sudhin is calling us from Jharkhand. Sudhin, hi, a very good morning to you. How can we help you today?
Good morning, same to you. Thank you.
Go ahead with your query, Sudhin. We can hear you.
Actually, I got Tata investment share, 10 shares, at the rate of 8,377. Should I hold, continue, or should I exit from this rate?
Okay, got your question. So then I'll take this up with Vaishali, because Vaishali, we've seen a significant run up in the counter yesterday. Do you think the momentum is here to stay, or should you book profits?
I would say continue holding. Of course, keep a trailing stop loss because it's run up one way. So in between whipsaws cannot be ruled out. But when I'm looking at the larger period time frame, I think I'm looking at this stock going towards 10,000 bucks. So in my opinion, if time is not the worry, then please hold. Look for higher targets.
To go up to 10,000 only because there's a stock split that has been announced, but the stock could well be heading higher. Vaishali, the point is well made. 1:10 was approved by the board, so the stock is going to be split. I think there's some interest on account of that. Rajesh, you want to come in on that? Of course, this is just corporate action. Usually there is buying interest by investors ahead of something like this, because effectively you get more number of shares. I don't know if it changes anything materially though. What's your opinion?
See, I totally concur to your view that it doesn't change materially anything, whether it be bonus or it's split. It's just a splitting of the value. But the thing is, retail interest starts coming up. Yesterday, we have seen Adani Power. It was on a 20% circuit just because of after the split and all. So that was what happened in 9,000 odd rupees. Retail just shies away, and when it becomes 890, 900 odd rupees, retail will come in a big way. And the next is Tata Capital IPO, which has been announced, and that is going to have some, some material effect on the stock prices of the Tata Group companies. So for that reasons, these stocks are going to be in limelight. So I think maybe around 10% upside from these levels is quite possible, whether it's come split or post split. So that's the call. One should continue to hold.
hold is a view on Tata Investment. I'm coming back to you on the cement pack, and it's an interesting one to track because Q1 was better than expected. All signs are pointing to a resilient Q2 as well, despite the early onset of the monsoon. Specific question on Ultratech Cement. Yashoda from Bengaluru is asking if this is the right level to buy. Rajesh, what's the view?
See, as far as levels are concerned, that I think Vaishali would be a better person to say. But I think the company is fundamentally very strong with the largest capacity, doing very well. And with the kind of demand upsurge we are seeing in the entire cement pack, it's one of the best play in the cement pack. Secondly, if you are looking for a long-term horizon, by long-term I mean anywhere between more than 12 to 18 months, then you shouldn't be much concerned about levels, because at 12,000 odd levels, 200, 300 rupees here and there hardly matters. Thirdly, if you are wary of buying a share at 12,000 odd rupees, you can go for Grasim, which again is a holding company of Ultratech. So you get the indirect hold of Ultratech plus the other businesses of Grasim. So that's the two choice one can have.
All right, we've got our next question from Lata, who's writing in and asking about FM Industries. She wants to purchase 1,000 shares of FM Industries and wants to know if this is the right time to make an entry from the next 6 months perspective. Vaishali, do you think that's the correct reading?
I would say so. Actually, since it's for 6 months, I would say keep on accumulating because the long-term trend is very intact. Right now also it is at a good level to start buying. But I would say when it's for a longer-term period, keep accumulating, keep 1900 as support and look for targets like 2300, 2400. That would be the target for now.
All right, Vikrant Engineering is the name of the counter we're talking about next, and a short-term view is being sought by Shashank, who's writing in from Hyderabad. He has already bought at 110 rupees. Yeah. So 110 rupees is the buy price. 4,000 shares have been bought. So significant quantity, losing ground. But the stock is not too far away from the current market price, or rather from his buy price. Should he continue to hold, Vaishali?
Keep a stop loss of 103 and continue to hold because, of course, I have limited data, but currently it's at a support of a moving average.
Okay, all right. So that's the view that we have here. Okay, we've got our next question on Mukka Protein, and this is from Arni Agnihotri, who's writing us from Pune and is a short-term investor. He's got 10,000 odd shares bought at the levels of 30 rupees. The stock is currently trading at 27. But do you think in the near future, Vaishali, he can get into the greener territory and make some profits?
Well, there is no positive trigger right now, but just one thing that it has corrected substantially. So 26 acts as a support. The trajectory is down. The conviction comes only about 30 rupees. So wait in what scenario.
Okay, all right. We've got our next caller. Sijo is calling us. Sijo, hi, a very good morning to you. How can we help you today?
Good morning, madam. I have a query regarding Sonacom. I was holding 320 stocks.
Okay.
Average of 540. So I want to know it will be hold for long time and I can add more stock in this stock. What is the view?
Okay, all right. Got your question, Sijo. I'll take this up with Rajesh. Rajesh, your view with regards to where Sonacom Star is concerned?
It's a very strong company, a strong order book, and the best part is around 70-80% of the order book is from the EV side. That's flourishing. The only problem is the unfortunate event that took place some times back, and for that reason the stock is under pressure. But I think once these corporate problems are solved out, it's going to go up to around maybe 474 odd levels in the near future. So at this point of time, not only it's hold, one can even buy. Somebody looking for buying this stock for a medium to long term horizon can even buy.
Okay. All right. I hope that answers your question, Sijo. The next question is on SpiceJet, and Kader is asking this question. He's writing in from Bijapur, and he's bought at levels of 43 rupees per share. 8,000 shares have been bought, and he's looking for a 3-month time frame. I'm not going to ask a question on the fundamentals. Really, it is a short-term question, and I think it's a trading idea. What's the view, Vaishali, on the charts?
Avoid.
Avoid. So exit at this point?
Yes.
Book the losses? Okay.
Yes.
And so then, okay, if that is the case, then let me then ask a fundamental question. Since on the technicals it is, and I know Rajesh is face, and by this point I can read his expressions. I'm guessing that he is not going to suggest a hold on the fundamentals either. Would you suggest, on the other hand, to switch to the market leader, which is Interglobe Aviation at these levels? The prospects for Indian aviation and for the market leader, which has over 60% market share in the domestic market, seems to be quite significant.
See, Alex, the problems of SpiceJet is never ending, I think. Every now and then you have some bad news coming in and the stock starts moving down. It's still trading at around 52-week levels, 52-week low levels, if I'm not wrong. So it's better to avoid these kind of stock fundamentals. There are nothing left. Sometimes there are news of salary being had, sometimes other things. So why not go for the market leader? That's Interglobe, as you said. Yes, it's a pricey stock, but then it's a market leader doing very well. The numbers in the last 2-3 quarters have been very good. And with crude around $70 from such long period of time, I think these companies are going to do well. So switch from SpiceJet to Interglobe.
And look at that chart. In fact, if we try to pull up the comparison between the two, SpiceJet has been down 48% almost year to date, and Interglobe Aviation has seen an uptick of around 25% year to date, and that explains,
stark,
yes,
right?
It's very stark, and that explains the fundamentals and the technical view as well, right? So thank you for that, both of you, Rajesh and Vaishali. We've got our next question then from Chaitanya, who's writing us from Andhra Pradesh Visakhapatnam, and asking about CDSL. He wants to know if he can make an entry at the current levels for the next 2 years. Rajesh, your view with regards to this counter?
Of course, it's a good buy, no doubt on that. The EMI stocks are doing well, have been doing well in the recent past. It's only recently that they have come under certain pressure because of all the news. But I think the way equity culture is expanding in our country, be it direct equity or be it SIP, these companies, be it NSDL, CDSL or BSE, are going to do well. It's a buy from our side for somebody thinking of 2 years horizon.
All right, news on the bottom of your screen, and something to bear in mind. This is a letter that has been sent out to shareholders of the Adani Group, specifically to Adani Green, I believe. I'm going to try and pull up the details as we're speaking about it, but some of the data that comes through, or some of the information that comes through, this is a message by the chairperson, Gautam Adani. What was meant to weaken us has instead strengthened the group, and this is in response, of course, to the Hindenburg report from 2023. January 2023 was when it came through, and as you probably are aware at this point, the clean chit came from the regulator after a very detailed investigation. Of course, that in itself followed a Supreme Court verdict in the issue. A specific investigating team had been put together to look at the allegations that had been made by the short seller Hindenburg, and everything that has happened after that culminates in the clean chit that was given to the group last week. In fact, some of the other statements that are being made, the gross block has expanded by nearly 2 lakh crore, a 48% increase. And he's specifically speaking about this company. It delivered transformative projects that have reshaped India's infrastructure landscape, and ultimately that is what the group is involved in. You're talking about right now the letter to shareholders of Adani Green, and so therefore the chairperson is talking about the Khavda project, where the plan is to take solar capacity all the way up to 30 gigawatts, which is a very massive amount of solar electricity generation capacity. The report, he says, was not merely a critique of the Adani Group, but also an attack on the capital markets here in India. And this is something that has required Adani Group to buckle down, reduce the amount of debt that is had on its books, and strengthen its financials. He says last week SEBI delivered a resounding and unequivocal response on that Hindenburg issue. With a clear and final word from SEBI, the truth has prevailed in this entire saga that has gone on for 2.5 years. What was meant to weaken the group has instead strengthened the group in terms of the financial performance as well. This is something that I was alluding to. Over the course of the last couple of years, the amount of debt on the books has been reduced on the balance sheets of various group companies. And remember, these are infrastructure companies. They require debt to function. At the same time, you've actually had significant cash generation. And there you go. The portfolio EBITDA has actually risen from 57,000 crore odd in FY23 to as much as 89,000 crore rupees in just a couple of financial years. This is a very significant statement, right? So some of these data points, of course, you will be aware of because you probably followed these companies, but it's important to sometimes stop and take stock of what has been achieved in a very small time frame. The absolute growth in portfolio EBITDA standing at 57% in the span of just 2 years. And of course, quite a few of these stocks reacted quite sharply after that development from the Security and Exchange Board of India, where you had, for example, an Adani Green that was up about 12, 13, 15%. You had Adani Total Gas, which a lot of analysts have pointed out was trading at a steep discount to what the valuation should have suggested, and it has recovered quite substantially from those levels. At one point it was up 20%. I believe it was at the upper circuit. Adani Green also one of the counters that did particularly well. And of course, don't forget Adani Enterprises, where it's been viewed as the incubator of the group. Adani Airports Holdings is one of the entities that falls under the ambit of Adani Enterprises, and you probably know just another 5 days away, the opening of the Navi Mumbai International Airport. Apart from that, you have 8 airports that the group controls, and that it also includes, of course, the current international airport, MIAL, in Mumbai. What is interesting to note is the plans on that front as well, where you're going to have city-side development that takes place. Of course, the conversation at this point is about Adani Green and the statements that the Adani Group chairman has made. I'm going to read through some of these things. Indian markets awoke to headlines that reverberated beyond Dalal Street on the 24th of January. That is the reference to the Hindenburg attack that took place. The report was not merely a critique of the Adani Group, it was also a direct challenge to the audacity of Indian companies to dream on the global stage. Because as you know, at that point, the group was looking overseas to expand in significant geographies. The report marked the beginning of a test that pushed every dimension of the group's resilience. This is all from the statement that Mr. Gautam Adani has sent to shareholders of Adani Green. Last week, the Securities and Exchange Board of India delivered a resounding and unequivocal verdict dismissing allegations against the group. With SEBI's clear and final word, truth has prevailed. What was meant to weaken the group has instead strengthened the very core of the foundations. This moment is more than regulatory clearance. It is a powerful validation of transparency. It is the truest evidence of the resilience in the group. And he says that the resilience lies not in words, but in performance over this period. And he's specifically speaking about the portfolio EBITDA. That's something that I referred to. It's moved from 57,200 crore rupees in FY23 in just 2 years to 89,800 crore rupees. That absolute EBITDA growth standing at 57%. The 2-year compounded annual growth rate at 25%. The gross block, as I mentioned earlier, has expanded from 4.12 lakh crore rupees in FY23 to 6.1 lakh crore rupees in FY25. Rajesh, if you're still with us, I have a question for you about this. And of course, we saw the reaction in the stock prices just last week. What do you make of the statement? This is, of course, highlighting the tremendous growth in the EBITDA that the group has managed, along with or alongside the deleveraging strategy that it has employed. And quite a bit of the expansion plans now are expected to be fueled by the cash generation that the companies have achieved.
I totally concur with your views, Alex. The statement by Mr. Adani is very comforting, not only to the entire market as such, but also to the small shareholders who do not have access to much of a data, much of a story. They just go on running through the, all the negative news and all. So it's better for them. And as far as the debt levels are concerned, which has been mentioned, I think with the kind of infrastructure growth this company has been witnessing, uh, be it ports, be it renewable energy, be it gas, be it power. So these kind of infrastructure do have to take some amount of debt. Otherwise, this is not possible. So only measuring some company on the huge debt, I don't think that's the right way to do. This would be a very comforting statement. And yes, the company the group has been growing very well. And out of the entire pack, we have some of our picks like Adani Enterprise, Adani Power, and Adani Green at this point of time, which we would recommend our investors to buy for a medium to long term horizon.
Got it. Okay. I'm bringing Hiral into this conversation